Hello, everyone. Welcome to my YouTube channel. This is Miss Fierce, from the Fierce Trade House. Oh God, it's been, I think, 9 months, nine, 8 months, 8 months since I've done an analysis. I've done a recording of my sessions. It's been a while, guys. A lot has been happening. I kind of took a break, not from trading, but from just doing the weekly analysis. There was a lot of things shifting in my life, and I needed to I needed extra energy for my business. I don't know if some of you know this, but outside of trading, I'm also a copywriter and I run a digital marketing agency. So last year, things were picking up a bit, and I mean, it was quite something, and I just couldn't handle managing both, just doing the weekly analysis. So I took a break, and also on that break, what I also wanted to do was keep perfecting. Like I've never stopped trading. That's one thing that I've never been able to do, like to just say I'm not trading anymore, I'm not looking at charts. Since I started this journey in 2018, December, I've been at it since, consistently. And I think after the 1 year where I spent time just taking people through my trading course and my beginners and advanced, and then eventually I merged it into just one course, which went really, really well. So I did that for about a year and some. And then at some point, 8 months ago, I just decided, you know what, I need a break to also kind of refine my strategy, and also just for myself. Sometimes what happens as traders and as teachers, when we are teaching trading, it's very, very simple to teach, by the way. Anyone can do it. But then when it comes to actual trading, even for yourself, it's a whole other ball game. And I found that I was spending so much time supporting my community, my Fierce Traders community on Telegram, with signals and all that. And I was just like, you know what, I need to take a break, because I'm busy monitoring trades for everyone else and I can't trade. And, it was just kind of conflicting with everything. So I did send out communication to everybody and said, okay, guys, I'm going to take a break on the signals. I'm going to continue teaching, because I love to teach, and I'm pretty good at it. So I said, let me focus on that. And then my work on my business with my digital marketing agency, I started getting a lot of inquiries on that end. And I just said, you know what, it's possibly the time for it. So let me just refocus as well on that. And that was that. But in between, like I said, all through, I still trade. I also got funded at some point. I'm still funded. And I'm trying to get my second funded account, which is a 100K account. I had a 50K account. I want to get a 100K funded account with my Forex fund. So yeah, that's what's been happening. Yeah. So I'm back, and the reason I'm back is because part of the reason why and for guys who don't know my story, I think maybe if you ever attend one of my classes or my online course, which is now an online digital course, I talk about it in my initial class, the beginning, the first class for that course. And the reason why I got into trading was because I was coming back from the backdrop of just having a really bad experience with trading or being traded for by a third party. And I just really, really wanted to learn. And one of the things that drove me to begin to develop my own course in terms of my understanding, and I must credit the mentors I have followed over the years. Nothing I teach is necessarily brand new. But I've also just over time just refined it and just try to remove all the noise and make it a bit simpler. So in fact, how I look at the charts right now is a culmination of all these different strategies I've learned, and then I've just like cleaned it up completely. And for myself, I wouldn't say it's the best strategy or anything, but it's really simple, right? So reason why I was so keen over the last 8 months where I have been completely quiet with my trading in terms of publicly is because I just wanted to really refine this, what I was doing, and to really backtest and backtest. And I realized that my challenge as a trader is I find it I could have not entirely diagnosed officially, but I feel like sometimes I could have a challenge with attention. You know, like people talk about ADD. I don't want to claim it, but I do find that sometimes I get easily distracted, and it's very hard for me to do to assess multiple assets at the same time. So what the signals group was doing for me was causing me to look at different pairs, and sometimes I would mess up because different pairs, different assets move differently. And then, of course, I'm assessing pairs that I don't necessarily trade. So I'm not really paying attention. And, you know, sometimes I'd give a signal and it goes the other way and somebody's account, you know, should they lose money or whatever. And I just didn't want to be in that position. So I decided to narrow down onto what I really, really like and enjoy trading, which is the indices. So really my focus going forward is I'm not trying to be the guru of trading Forex in the world or all that. I just want to be able to teach you guys, or maybe more so help you guys understand the assets for indices, or rather understand the indices and how they move. And I also have my personal goals as to why I like the indices. I think when they move really well, and I can achieve my trading goals faster than if I was trading maybe a currency. And again, I could just be possibly biased, but I've been trading, for example, US30 and NAS 100 NASDAQ for the last 4 years. And I really, initially, I was really, really excited about US30. And then after blowing a couple of accounts, I went to NAS. But I then, you know, came back. So I was kind of seesawing between NAS and US30. And at some point, I then brought in gold. But then I found gold for me, like I said, my personality, you know, I'm a very aggressive trader. And I find gold is very erratic. And because I'm pretty aggressive, I don't think it matches my personality. So the thing I want to tell you guys also about trading is, and I'm sure you've discovered, pick an asset that matches your personality, or that doesn't give you heart attacks, or you enjoy trading, or you feel like it, you see it, you know. So just because I trade indices doesn't necessarily mean you have to. But I think the principles that I apply when I'm trading indices would apply when I'm trading any other asset. But because I haven't traded any other asset other than the indices, that is US30 and NAS, I really don't like to claim that I'm perfect with the other assets, the other currencies and the metals and things like that. But also the crypto market as well kind of moves like the indices. So I also enjoy staring at the cryptocurrency market. And at some point, I think maybe later in the year, towards the end of the year, probably will start talking more about the futures, you know, the cryptos and things like that. So for now, that was just a backdrop to explain why I look at two assets. But more specifically, for the last 1 year, to be honest, I've only traded US30. And the reason I arrived at US30 is because, like I said, I think I like the way it moves. I think it moves more smoothly than NAS. And it moves a bit more than NAS does within a specific period of time. And I think I've just looked at it a bit more. Yeah. So bear with me on my analysis. I'll be doing a lot of US30, looking at the charts for US30. But if you want me to look at maybe a different pair, different asset, even if it's a currency, feel free to shout out in the comments. And I will make sure that the next analysis week, or the next time I do an analysis, I will be able to just share that with you. Yeah. So as you can see, this is US30. But these are trades that or setups that I look at. I've been looking at over the last couple of months. How I mark my charts and everything. So I want to look at specifically the last week, because now we're coming into a new week. And what I'm looking at. So last week was what? So this was a Sunday, and usually I mark out the week from Sunday just so that you guys, when the market opens, right? The New York time market opens. So I usually like to know where my week begins and where it ends. So you can see I've marked this and this. So this is basically from one Sunday to the other, right? So for this specific last week, this was our Sunday. Wait, am I saying the truth? I feel like I'm lying. Yeah, so this was Sunday to Sunday, and then we had this week. So let me remove this so I don't confuse. So there's this here Sunday 9th. So this was Sunday 2nd. So this was the beginning of July until the 9th of July, and then now until today, right? So that's one thing that I like to do, because I just like to see how the market moved in the week, because then it can kind of inform me like what's happening. Are we ranging? Are we what? And we can see that for a time, I mean, the last, I guess, 3 weeks, this currency has really been in a range. This is on the 1 hour time frame, right? And so we see that, you know, it broke structure around here, but then it's just been in this range. So when I'm looking at it like today, if we look at last week, let me look at, this was Sunday. And then, so let me look at the last 2 weeks so that you guys just have an idea, right? So obviously I haven't just created these settings right now, so don't think I just put them up for the sake of it. So so what we see on the 2nd of July, the beginning of this month, just the previous week, what we see is US30 was pushing up, right? And then at some point, the Friday before I think that would be the 30th of June, we kind of, you know, we posted the high, and then we pulled back, right? We pulled back, and then we opened on Sunday. We kind of consolidated for a bit this entire period. Like we consolidated from the market open until where we broke structure around Wednesday. So Wednesday is really when we broke structure. So from between Monday and Wednesday, we were kind of in a consolidation, and then around Tuesday we began to push lower. So let's see. So what we see is price pushed down, right? It kind of took out the previous, just the immediate previous low here of the week, right? Swing high, swing low, pushed down, and then we find this moving higher. So what I had anticipated initially was that price will, like, you know, break out and take out the Friday high. It didn't quite do that. It almost did, but it didn't, right? However, when the market opened, we opened bearish. I mean, the previous week we closed bearish, and then we also kind of opened, I think, with the open candle here was a bearish candle. We consolidated, and then we continued to, like, this move here kind of informed me, okay, what's happening? We might continue to push down on market open. And we did, right? And then what we see is we then pushed up, took out, there was a lot of liquidity running up here. Now, I think in my past analysis, I talk a lot about liquidity. Basically, liquidity is relatively equal highs. And usually price tends to search for those points of liquidity. So when you see this pull back up here, we're just seeing that price was actually, we were bearish, but price was actually coming to clear out. And this was probably in the London session, which if I look at it, yes, that this was around the London session of Monday, we took out liquidity, right? But then before that happened, we took out this swing low here, okay? And we can see we're forming really bearish structure. But what I want to do, so that I don't confuse, because I didn't enter this trade on the 1 hour. I never trade on the 1 hour. So I'm going to just drop down to the 15 minutes so that we can see why I my setups were looking the same. So let's just go back to I didn't notice I was on the 1 hour. I was like, why does it look different? So I'm looking at, so here we are, right? Yeah, so we can see a bit more movement in the 15-minute. So I like to enter my trades on the 15-minute. So this is a thing. We formed a swing high, the Friday high. We dropped, formed the swing low just before the market closed, and then the market opened with a gap. So on the 1 hour, it just looks like, price pushed up, but then you can see that the candle closed bearish on the 1 hour. On the 15-minute, we opened with a gap, right? But if you look at the structure here, just before market open, it was quite bearish. So let me just mark this out as that so that you can see what I mean. So structure just before market open was very bearish. So for me, there were two things I would be looking at. Like price would be trying to push up and take out the Friday high, and or it would just start its descent based on the previous week's structure in terms of how it ended. So or how it closed. So for me, I trade structure, like how when I look at the structure of the market and it gives me a signal, I'm like, this for me was like, okay, the next week could probably open bearish. And it did, right? It consolidated for a while, actually for a long while until Tuesday. And then it dropped here just before the Tuesday major drop. Then it pushed back, took out liquidity, and then it continued forming bearish structure here. So the reason why I put a buy here is because I was actually thinking this trade will go up all the way to take out this swing high. It didn't, but we were able to, let's say, cover about 100 point movement, right? So what happened is price hit, if you look at the 15-minute, this is an order block. It took out liquidity below here, and then it pulled back. And usually when price takes out liquidity, it pulls back in the opposite direction before it continues in the direction it wants to go to. So when it didn't take out this high, I was like, okay, I saw the next candle here. I was like, okay, this thing looks like it wants to, probably sell. And what we see is price actually did begin to sell. Like I put this setup on this imbalance here, and that's what happened. So it tapped into the imbalance and then began to drop. Now, if you are not sure about what's happening here, what you could have easily done is just wait for a break of structure. So we are seeing this previous swing low. We're seeing the high. We didn't quite, or we kind of broke structure here, but then we pulled back, right? Because we can see this candle here kind of went below the structural level here. So we kind of broke structure, but then we pulled back to clear the liquidity because, we left a lot of it up here. Now, the cue for me to enter on a sell is if, or a buy would be if any of these structural levels were broken up, swing high, swing low, swing high, rather swing low. So from this swing low to this swing high to this swing low. So what we see, there's a structural level here that was taken out on Wednesday. Actually, I thought it was on Tuesday. That 1 hour is looking like Tuesday, but it was actually on Wednesday. And what we see is this here was a pretty impulsive move to the downside. We took out structure completely. We then tagged into this imbalance that was here, right? Now, usually what I say is enter on a retest. Never enter when the price is going down and then say, okay, let me jump. No, usually wait for a retest. And the reason why I figured that there would be a retest at some point, or I figured there would be a retest at some point, is because we left liquidity up here. This imbalance was filled. Usually when there's an imbalance, there's a gap like this in the market, usually price will come and reprice again where around the same level this gap is and to close that gap. So this is why price pushed up. I don't know if that makes sense. But if you keep, I guess, following me and I keep on having these conversations, it'll make sense more and more. And then price just tagged into that imbalance and then dropped. Now, a good place to enter would be either on that imbalance, if you're not confident, on the retest. Once this internal structural break happened over here, right? And then you can sell this to whenever, like at least you'll catch like 200, 300 points. In this case, it dropped 400 points. So usually what I do is I look for trades that head anywhere from 100 to 400 points. That's usually my target for US30. If I'm trading NAS, I'll be looking at 100 to 200 points before I see a change in trend. So that's just a heads up in case, but that of course depends on where you enter the market. You really have to be aware of where you're entering the market. So what happens, we see another structural break happened around here. Okay, so price dropped, retested, and continued to drop. So this would be another entry. So if you missed this one, which I think I missed, hence why my entry was not up here, this would have been a very good entry because we broke this structural level here. There was still opportunity to enter around the 34 to 10 area here. So that's usually my thinking when I'm about to enter the market. I'm looking for structural breaks that give me an idea of how the trend is going to go. So if, let's say, there was a significant push up, right? I would be like thinking, okay, we probably keep pushing higher before we drop, right? Yeah, so let's come now to like this week and what I'm thinking about this week. So actually that was 2 weeks ago. So last week, what I saw was, if you look at this again, we came from this swing high, we formed a swing low just before the Sunday opened on the 9th. Sunday market opened on the 9th, right? And we kind of took out liquidity here. So this pullback on Friday was simply because we had taken out all this liquidity that was resting below here. We cleared that out and then we pushed up, right? So I kind of felt like if I look at it from a range perspective, this was a swing low, swing high, swing low. So I was kind of feeling like when I marked this in the beginning of the week and I was like, I think this is the end of a trend, that was what I was suspecting. I think I marked this and I shared this way before all this happened. I shared that I felt like this was the end of a trend and I was anticipating a shift in market structure for price to begin to buy. And I remember on Monday telling people, I feel the market is bullish this week, right? And we were bullish all through. So I marked this out and I just wasn't sure how long will this thing keep on going because of this huge kind of manipulation in the market. I don't know if I should say manipulation, but I could say there's an expansion downwards. So I was like, this could push the market lower, yeah, before I see price needing to start moving higher. So I was very clear. I was like, okay, end of a trend. I'm now waiting to see the best place to enter the market. So I didn't want to just jump in immediately because I was like, yes, there's going to be a buy. If I had bought up here, I would have been caught in this downtrend. And this downtrend or this whatever is like about what, 100 points, 104 points. I never want to go below 50 points in terms of a pullback. I think I'd be very, very stressed. So if I see, when I looked left, I saw a bit of liquidity still resting below here. And I think when I zoomed in, there was also an order block here. So if I just extend this to the right, just so that you see what I mean, this was, so those liquidity down here, I even marked it, right? The June swing low, because this is in June, the previous month. And then this was also a point of liquidity. And then there was an order block here. So if I extend this like this, I was anticipating that I want to see price take out that level before I think of entering the market. And because this is an order block, I was looking at now rejection of the market. So that's exactly what happened. It just broke through. And then I begin to see price shifting higher. Okay. So that was basically it. And then we bought, right? And like I said, in such a scenario, you buy for 400 points and we eventually hit the 400 point mark on Tuesday. So I remember I got out of the market around 33,960. This was about 300 pips into the trade. because I just didn't want to deal with the pullback, but I was sure that it was going to get to the 400 because structurally we're seeing we were bullish here. We pulled back, and then this here was just a very bullish move. And coming off of the back that we were at the end of a trend, in my head, I was like, they're definitely going to continue. This is just structure shifting. They're going to continue to buy. Now, for the remainder of the week, guys, I got caught up with work, my other business. Like I said, I was not able to jump into the market again or look at it properly to give trades. But when we broke this structure level here, this was a sign that price was continuing to go up. And you can see I was just marking the expansion impulses happening in the market, and we just kept on rising and rising and rising and rising, right? On Wednesday, we kind of hit a ceiling, we consolidated. On Thursday, not much activity. We kind of pulled back. I had set up this setup just to watch the market. And finally, I was looking at 200 points. We did hit the 200 points, and then price began to shift lower. So I don't know if this has been helpful. What I see for this week is two things. I kind of feel like we may push up at some point. So I'm anticipating we'll take out this swing low of Friday here, which is the intermediary swing low. We'll probably take that out, maybe push lower to take out the Friday low. If that happens, then we may find the market might push higher, right? But right now, I'm just thinking that, I would really like to see price take out this swing low, take out the Friday high, and then continue to shift lower. So I'm kind of bearish on the week, but my final decision will be based on how the market opens structured. Like if I see impulses and things like that, I'll be like, okay, maybe we may continue to shift higher, but we consolidated for a while. So I think we may just try to take out any liquidity resting above here. Let me see if there's any liquidity resting somewhere. I'm sure there is somewhere. Actually, we did take that liquidity out, and that's why probably we pushed lower. So I feel I would want to see, what I want to see is price maybe push lower, push up, and then down. Okay, so if I see that, then I'll be looking at, if you open bearish, I'll be looking at a retracement and a pullback and then a push down. If we push higher, it depends on what I see. If I see like an impulsive move, I'll probably wait for that impulsive move to end. So we might find that we push a bit higher, and then I'll still look to sell this market. Yeah. Now that's if it does that. But if it just drops completely and we take out structure, I'll probably just look for a quick retest back into this zone before we continue to the downside. So I'm still bearish on US30. Yes, I'm still kind of bearish on US30, but we'll see. So guys, I think I'll leave it at that. I don't want to talk anymore. I think I'm a bit rusty trying to do this in a short period of time, but I hope it's exciting to hear that I'm back. And I'll try and continue to break down these setups properly. And what I told my community this last week was like, I'll try and drop like 1 or 2 trades every week that people can just take and at least make some money off of it. And those will be trades that I am also entering live. This week, if it's not too hectic, I'll try and do more. But for now, at least I can safely say that I'll try and at least give 1 or 2 signals. Yeah. Or trade setups. So that's it for today, guys. Thank you so much, and see you on my next analysis. And again, if you want me to analyze as an asset or a pair that you like, please let me know. Yeah, and your feedback is welcome as well. Thank you, and have a fantastic trading week ahead. Bye.